Hey, Renter Retires, it's Adam Schroeder here with the founder and CEO of Renter Retirement, Zach Lemaster. We're going to have a little shortened episode for you today because we have one very specific topic that we want to talk about, and that is if you've looked at our inventory at all in the last few weeks, which I hope all of you are, and if you aren't, then you're missing out. You've seen some new markets pop up. You've seen some really good rates become available. You've seen some free property management come available. And we want to talk to you about some of the different ways that we have available to purchase these properties, because it's completely different than anything Renter Retirement has ever done before. I've been here a while and it's new to me. Zach's been here, I don't know, forever, and it's new to him as well. So we want to go over those options and showcase to you what they are and who it might make sense for. So Zach, I'm going to let you take the lead here and just talk a little bit about how we're helping investors out and giving them the options, because some might make sense for one and another option might make sense for other people.
Yeah, thanks, Adam. We're very excited to bring this investment opportunity to our investor community that you are not going to find with any other turnkey company, with any other investment company. We've worked very long and hard to create some big partnerships with some national type of builders.
Who will laugh at you if you go to them and ask for these deals, by the way?
This is a benefit to being part of the Renter Retirement community as a whole, because what we get the opportunity to do is negotiate with large-scale builders on a level like an institutional buyer would, but then we get to pass those savings forward to the individual investor because it's a volume play. If you're an individual investor trying to negotiate certain deals and you're buying 1 or 2, 3 houses, whatever the case is, obviously, that's different than an institutional buyer that's coming in and buying hundreds or possibly thousands of houses. Well, the benefit for the individual investor being part of the Renter Retirement community is you get access to that, right? And we try to facilitate that for you, where you get to benefit from a institutional type of negotiation and incentive structure being an individual investor, because you're part of our community and we negotiate on a whole of our community with some of these larger builders. And we're consistently doing that. If that hasn't been clear to you, that's one of the biggest value adds that Renter Retirement does. Well, hopefully it is now. But to be very intentional, what we're excited to talk about today is a scenario where you have options that are going to be extremely attractive and allow you to make big moves in a variety of different scenarios. And so essentially what we've done is we've negotiated with national builders, a couple in particular that we cannot disclose their names per their request, but we're happy to facilitate the assistance of you acquiring these properties in one of 3 ways. So these are the incentives that we're going to talk about. You have 3 options basically to buy brand new construction properties across the country in some of the best markets in the country, markets we have never even offered in, even in markets that maybe we wouldn't because they're more expensive markets. But if that's an area where you really want to be growth heavy, you can have access to those properties. But here's how this breaks down. You will essentially right now, as long as this lasts, as long as the inventory lasts, have options to do one of 3 things to acquire properties in one of 3 ways. One, you buy a brand new built house where you can have a rate buy down into the mid 5s to 6 range to allow you to cash flow better, and you will have an incentive to basically offer free property management. So that's option 1. You basically have a builder buy down on the rate, and you have free property management for a year to allow your cash flow numbers to work in your favor and be positive cash flow and achieve the returns that you need. You buy with normal financing. Option 2 is that if you don't choose option 1, you can actually buy a property significantly below market value and take a 5% price reduction on the property that you're purchasing. So on a $300,000 property, you get a $15,000 price reduction on that property just by being a part of the Renter Retirement Investment Network. You're not going to get that anywhere else. You're not going to get that working directly with, a national builder on the retail side. They are not going to negotiate with you. If you buy a $400,000 house, that's a $20,000 price reduction day one. That means you come into immediate $20,000 of equity, where if you're just any investor, retail buyer off the street buying that exact same house, it's $20,000 more. Option 3, if you don't want option 1 or 2, is actually where we can offer a builder credit, what we call an equity credit at closing, that's either paid at the closing table or comped to the managerial team. Essentially what this does is it takes that 5%, instead of taking the equity reduction or the price reduction to have immediate equity, Instead, you can put that money back in your pocket, right? Immediately at closing at 5%. So again, on a $400,000 property, that's $20,000 that is going right back into your pocket that will reduce your overall down payment on the house. Now, this is very exciting because if you run the ROI numbers, which we will assist you in doing, ROI is based on two factors, an input and output of, how much money are you out of pocket to acquire that investment and how much money are you acquiring that year? And it's on an annual basis. So anytime you reduce the amount of money that's out of pocket, your ROI goes up. We know that the cash flow is going to stay the same because the rents are going to stay the same. But if you reduce the amount of money that you're putting into the deal by 25%, because if you put a 20% down payment on a property and you get 5% of that back, that's getting 25% of your down payment back, that means your ROI is going to go dramatically up. And so this is a creative way where you can either cash flow more day one and for future years with option one with a rate buy down that you can hold for 30 years and have free property management. Option two, where you actually get the price, you come into immediate equity at 5% below market value. Or option three, where you actually get that money back in your pocket where it ultimately reduces the down payment on the property to increase your ROI and allow you to have 5% more to go in, reinvest in the next property or build your reserves. Now, Adam, I want to take this one step further.
Yep. And I was going to say, but wait, there's more.
It's going to blow people's mind. So right now, there is still, we still work with credit unions that offer a 5% down payment on properties, right? You still have to qualify for this loan. You can buy up to 5 investment properties with as little as 5% down in select markets. It's not every market on new construction properties. If you qualify for the loan, this is with local credit unions offering portfolio investor loan products. So think about this. If you do one of these loan structures where you buy a property with 5% down and you get immediate 5% kickback at closing, that covers all of your down payment on the property. You're essentially into a brand new construction house in an A-class area for zero money out of pocket. Now, you likely will have some closing costs and some loan costs, but it's going to be very minimal. But you're getting all of your down payment back at closing to be able to be into a property and with very little to no money down and still have an asset that's appreciating over time. Now you have to look at each asset in that scenario to see if it actually cash flows or if it might be negative cash flow slightly because you have 95% leverage. But if you actually factor that in and calculate your ROI to get that 5% back immediately, you will still have strong ROI, both and also owning an asset that appreciates year after year, that has rent go up year after year. And this is a creative way where you can take your capital and stretch it way further to acquire more assets in a shorter period of time than doing the traditional way of, just 20 and 25% down on the property, moving on, saving up that again over the next 1 to 2 years and doing the same thing again. This is a super exciting way that Rent to Retirement is bringing options to you to acquire brand new construction properties across the country in over 20 different markets where you can dramatically grow your portfolio and be a savvy investor. I'm super excited about it. Adam, what do you think?
I'm excited too. And just so y'all know, if you go there right now, you may only see 1 or 2 new markets. That's because, we got to do a lot of vetting for these markets. We're going to be bringing more consistently as we find the right markets. So if you don't see something you like right now, which you will because the numbers work in all of these places, just know it's not going to be for every single new construction on our website because we're still working with builders who are, not the national builders doing this 5% option that we have, but it will be a good amount on there and you will see everything there is to offer. We're getting into the Oklahoma City market where we've had a lot of people asking us about that area. We're in, the Houston, Texas area where a lot of people have asked us in the past. Now, unfortunately, in Texas, it's one of those markets you can't use the 5% down payment, but you still have the other 3 options that Zach mentioned. So you're going to see a lot of new markets coming up there as we continue vetting these out to make sure that they make sense for investors. So get excited.
This is probably
bottom line.
Yeah, because this is what we do, right? We try to negotiate a volume type of scenario, an institutional buying type of scenario, and make those same opportunities available for the average investor, right? In addition to vetting local areas that we know will be in the path of progress, where we have appreciation and high rental demand and rental rates over time, and be in areas where we have strong managerial teams. These are all turnkey properties, right? where you can actually buy a property. Now, management is not associated with the builder, of course, so we've had to source a managerial team. But I think this is important to note that this does not actually have to be an investment property either. You can buy a property if you are looking to relocate, you want to operate a short-term rental, you want to own just a second home, if you want to buy an investment property, if you want to buy a property below market value and hold on to it and eventually flip it, as it builds equity. I mean, these are creative ways that you can still do better buying through our network than buying on your own. I want to review the different options one more time just so people fully conceptualize this. And while I do that, Adam, if you could look up and bring up the list of all the different markets, that way we can just fire through them, right, of all the different markets where there's potentially properties, just so you're aware, because Adam touched on some of them, but not all of them. But all right, so this is, again, one more time to just go through this. What we are doing is we've negotiated with a couple national builders to offer wholesale type of pricing to the individual investor, part of our network, that they normally would operate with institutional type of buyers buying hundreds of houses at a time. And this is a huge benefit that we haven't been able to do to this scale yet at Rent to Retirement, and this is the first time. And so as long as this lasts, it's going to be a very exciting opportunity. And now is the time to take action, to take advantage of this, because when this is done, it could be done. Hopefully we have an ongoing thing, but we never know, right? Just like the credit union option was 0 money down previously, that came and went within a few months. So this is a very exciting opportunity. I highly encourage you to take action. But option one, you buy a new construction property in one of many different markets. We'll guide you on which ones make sense for you, where you get a rate buy down to mid 5s to 6, at least where we're at right now. In addition to that, you get free property management for a year, right? That allows you to buy a 30-year fixed loan and have cash flow day one and have a fixed loan on a property below what the interest rates are right now currently for a long period of time. Allows you to cash flow extremely well from day one. Option two is to do a scenario where you come into immediate equity, and in lieu of taking the rate buy down and the free property management, you simply get a 5% reduction on the property. You choose a property, anyone you want, from this builder list, and you get 5% off that property immediately, right? On a $400,000 property, that's at $20,000 day one, right? Like $400,000 becomes $360 for you. You have at least $20,000 of immediate equity. And that could be creative if you're trying to turn that property quickly, right? If you want to hold that property for a few more years, or 1 to 2 years in a growing market, that allows you to be in a scenario where you could possibly BRRRR within a short period of time. You could sell it again or sell after a year in 1031 exchange. That could put you in a really good position to have immediate equity. Option three is to buy the same property, and instead of taking that 5% price reduction, you get that back in your pocket to reduce your down payment, which will dramatically increase your ROI, and it will allow you to have more capital to then reinvest in other properties. And just one last time, again, we still have the 5% down option with credit unions, where you could buy a property with 5% down, you get that 5% reimbursed, and you're into a brand new construction house in an A-class area for little to no money down, right? We're talking a few $1,000s, probably closing costs. And if you're one of these investors like myself that really likes the tax benefits and is all about scaling your portfolio, especially if you're doing accelerated depreciation and you're trying to buy properties and maximize your tax benefits, well, let's say you had 20% down on an investment property. Instead of putting that 20% down on an investment, just one investment property, you could likely buy multiple, putting a small 1 to 2% down just with closing costs and getting your 5% down reimbursed using that loan. So lots of creative things. I will do a more detailed analysis on each one of these options to actually show you the numbers. But I do want to, Adam and I wanted to get together and get this video out because there could be some time sensitivity around this. And this is probably the best offer we've ever had. We're super excited about it. Every single one of my team members is likely buying some of these properties as well in one of three fashions that make sense for them. And the best part is you get to choose as the investor what makes the most sense for you. Do you want to limit your down payment and maximize tax benefits? You want to maximize cash flow? You want to have immediate equity on the property? That's up to you. We're just here to provide the opportunities for you across the nation with brand new construction houses in really good areas, right? These are high income areas. Adam, let's go through, if you found it, let's go through some of the markets, just bullet point.
All right. We're We're going to go through them. So there's in Texas, we've got San Antonio, we've got Fort Worth, we've got Houston, we've got Dallas. Think of the big cities there. We've got stuff in North Carolina and like the Charlotte area, the Gastonia area. We're in South Carolina. We've got some stuff in Greenville. We've got some stuff in Gilbert. We've got some stuff. We got a lot in Florida potential. We got some Northport. We've got some Lehigh Acres, LaBelle, Palm Bay, Ocala. We've got stuff that you've seen on the website right now that's in El Reno, Oklahoma. We have Yukon, Oklahoma. There's some stuff in Arizona here. Now, remember, we haven't vetted out every single one of these markets, so you may not see them, but there's Red Rock, Arizona, Tucson, Arizona, North Las Vegas. We've got stuff in Georgia and LaGrange, Georgia. We've got stuff in Virginia, in Milford, Virginia, Newport News, Virginia. We've got stuff in Minnesota and Clear Lake. We've got things in Utah and Eagle Mountain, and we've got stuff in Colorado, Fort Lupton, Frederick, Severance, Colorado. We've got some in Commerce City. I believe there may be some in Denver. I mean, it's all over the place, and I didn't list everyone because I didn't want to be here for 20 minutes. But those are the big ones. Those are the states that we're in. We're talking to them, trying to get them to open up more markets as they come available. So I mean, there's a lot of options out there, and we hope to be showcasing a lot of properties in the coming weeks.
So we get a cherry pick, right? We work with you guys to cherry pick. You can choose any one of these inventory. Now, to Adam's point, not every single one of these areas makes sense from a cash flow perspective, and we don't have managerial relationships in all these areas. But that doesn't mean that you can't buy in these areas. We showcase the areas that we think was where the best opportunity is rental-wise, and where we have established managerial contacts that we vetted. And so if you want to tap into that immediate team, I mean, there's a dozen markets that we've already established those. But if you just so happen to be interested in one of these areas, or you want to buy in one of these areas and self-manage or find your own management, that be my guest. You can absolutely do that. There's nothing preventing you. If you want to buy new primary residence and get a 5% discount that you're not going to get on your own, like these are exceptional opportunities nationwide. So anyways, guys, we could be here all day telling you how excited we are about this, but this has probably been the best value opportunity that we've brought to our investor community. We're very excited to share it with you. And I think this is a huge way to make some big wins in 2024, regardless of what your goals are, right? You have options to acquire properties based on what your ultimate goals are. So if you're interested to discuss this further, to run some numbers on 3 different options that we explained, to kind of see where inventory is and get some better ideas about things, obviously reach out to our team, set up an appointment with us, and let's work through that with you. The inventory is first come, first serve. It's time sensitive, and when it's gone, it's gone. So Adam, tell them how to reach out to us.
Yep. So head on over to rentretirement.com, click on the inventory. You can see what we have available right now. You can also schedule a call with us right there through the website. You can talk to some of our strategists to figure out what market is best for you. They all have access to the list with all of the properties on it, so they can help you if you don't see a market you want that maybe I listed, or maybe there's more and you just want to ask, hey, are you in X state? And we can look and tell you where we are in that state. So head on over to rentretirement.com, book that call with us, and we will help you out in every single way we possibly can. Really appreciate the time you spend listening to us wax poetic about all the things that we get to bring to you. We'll talk to you on the next episode.
Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.